Dear friends of massive opportunities, Bitcoin is currently plummeting. Is this the time the investors have been waiting for? And is this a lifetime opportunity for us to invest? As of March 22nd, 2025, Bitcoin's price has been marked by intense volatility. After reaching an all-time high of $109,071 in January, its value has since plummeted by nearly 25%, now hovering around 84,000. This rapid decline has disproportionately affected new investors who entered the markets during the peak, leaving many of them with substantial losses. One of the most striking indicators of the current market sentiment is the spent out profit ratio, which measures whether Bitcoin's transactions on-chain are occurring at a profit or loss. The chart shows that the SOPR has been trending downwards with multiple sharp spikes in January and February, followed by a consistent decline. This suggests that fewer traders are selling at a profit and that more transactions on the other side, of course, are occurring at a loss. Notably, as Bitcoin's price that you see in the black line declined from mid-February to March, the SOPR has hovered around 1 or below, indicating a phase of increased capitulation. When the SOPR remains below 1 for an extended period, it suggests that sellers are accepting losses, often due to panic or loss of confidence in price recovery. This pattern of loss-driven selling can continue to lead to downward pressure on the Bitcoin price. However, historically prolonged low SOPRs often precede at a market bottom as weekends exit and strong investors accumulate at lower prices. If Bitcoin finds support and the SOPRs starts rising again, it could signal a shift in sentiment. Additionally, President Donald Trump made recent comments on the economy that have also added growing concerns to investors, as he declined to rule out the possibility of a recession. As he stated, "I hate to predict things like that. There's a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods where it takes a little time, but I think it should be great for us." While Trump remains optimistic about the long-term impact of his policies, his remarks have intensified fears amid ongoing economic turbulence. The latest Bank of America Global Fund Manager survey reveals a sharp shift in sentiment, with a record 63% of investors now expecting the global economy to weaken over the next 12 months, the second largest monthly increase in pessimism on the record. US equities have suffered their largest record outflow, with allocations dropping whole percentage points. The stock market has reacted strongly, with the Dow Jones Industrial Average plunging nearly 900% points, reflecting heightened anxiety over a potential downturn. A study by State Street Global Advisors found that the percentage of high net worth individuals holding gold surged from 23% to 38% over 15 months, starting in March 23, with 23% of those investors, by the way, holding gold and crypto, considering them as complementary assets within a diversified portfolio. The broader implications of these economic uncertainties could significantly impact financial markets, as a potential global trade war threatens to slow economic growth, disrupt businesses reliant on global supply chains, and increase, of course, volatility on the stock market. Meanwhile, persistent inflation could force the Federal Reserve to maintain higher interest rates, leading to increased borrowing costs, slower investments, and further economic downturns. With the markets already on the edge, this shift towards safe haven assets may also accelerate Bitcoin's adoption, as digital gold, particularly among investors, is seen as a store of value in an increasingly unstable financial landscape. Also earlier this year, the US government made the controversial decision to sell half of its 400,000 Bitcoin, raising approximately $360 million. What was initially seen as a strategic move to capitalize on Bitcoin's soaring price has since been marked and criticized as a massive financial miscalculation, as the sold Bitcoin would now be worth $16 billion. However, this seems to create a more brighter future, as after facing intense scrutiny from policymakers and financial analysts, the administration has since taken steps to mitigate the damage by establishing a strategic Bitcoin reserve and a US digital asset stockpile. On March 6 this year, President Donald Trump signed an executive order formalizing the strategic Bitcoin reserve, capitalized with the remaining 200,000 Bitcoin that were seized through criminal or civil asset forfeiture proceedings. The administration aims to leverage Bitcoin's fixed supply to enhance the nation's financial standing while acquiring additional Bitcoin through budget-neutral strategies to avoid burdening taxpayers. Furthermore, legislative efforts are underway to expand this initiative. The Bitcoin Act proposes that the US Treasury can acquire up to 1 million Bitcoin over the next 5 years, aiming to mirror the size and scope of the federal government's gold reserves. If implemented, this would represent approximately 5% of Bitcoin's total supply. This move marks a significant shift in US policy, signaling a broader institutional embrace of digital assets. Currently, in times of economic downturn, investors' behavior often shifts more towards risk aversion. This trend is currently reflected in the popularity of buffer exchange-traded funds. A buffer ETF is an exchange-traded fund that provides downside protection by absorbing a certain percentage of market losses, let's say 10 to 30%. In return, investors give up some potential gains due to capped return. These ETFs use option strategies to achieve this balance, making them popular in volatile markets. Over the past month alone, buffer ETFs have attracted 2.5 billion in inflows, with 4.7 in total for the year. And as the S&P index experienced a 6% decline, this is expected to continue. And such movements in the financial market clearly indicate that investors are increasingly prioritizing security over aggressive opportunities. And while many investors currently focus on action of retail traders, institutional sell-offs can have a disproportionately negative impact on Bitcoin's price, especially during periods of low liquidity. When large entities such as hedge funds or corporations decide to offload substantial amounts of Bitcoin, it can create a cascading effect where retail investors start to panic and sell as well, amplifying the price drop. We can see it in the graph. The ETFs outflows and the price drop show a clear correlation. This phenomenon is particularly pronounced during weekends or holidays, when trading volumes are typically lower. So finally, to answer the final question of this video, is it a good time to invest now? Given Bitcoin's steep decline, economic uncertainty, and regulatory ambiguity, the risks currently outweigh the potential rewards, in my opinion. Of course, this is not financial advice. Institutional sell-offs, government Bitcoin holdings, and rising investors' caution suggest further volatility ahead. Also, with buffer ETFs seeing record inflows and liquidity concerns growing, it may be wiser to wait for clearer market stability before making any major financial investment moves. But now it's up to you. What do you think about the future in Bitcoin? How will Bitcoin develop over the more unstable financial market? Let me know. As usual, you can check out my previous videos above. That's it for today. I will see you in the next video.